Hello and welcome to BFSI.com by the Economic Times. I'm in conversation with Nitin Chugh, who's the DMD of State Bank of India. Sir, glad to have you in this show.
Thank you, Amar.
So I have a couple of thoughts for you specifically on the digital side. We are seeing that a great revolution of digital is happening with the whole BFSI world, and banks are now talking aggressively about AI, Gen AI, Agentic AI, and not just digital. While I will take your views on traditional banking system also, but to begin with, sir, what are the changes, challenges, developments happening with AI at State Bank of India? What is your view? What kind of case studies you have? And what kind of difference do you think that the AI will bring? A lot of questions, but the core is AI.
Yeah, maybe I'll just have one answer for all your questions, but a long one. See, the first thing we need to appreciate is that banking will usually adopt technology as it comes.
Yes.
So we're not manufacturing technology by ourselves. So when the whole digital wave came about and the payment wave came about, we were users of technology, and of course we innovate on top of that. So what's happening with AI now is that AI is now looking like one of those technologies which can fundamentally alter the operating models, especially with agentic AI. The use of AI has been there for a very long time, especially in SBI and I'm sure with many other banks. AI has been used for a lot of use cases, a lot of models, a lot of credit fraud detection, cross-selling, etc. Portfolio management also. But now I think there is a whole case to also bring in workflow level intelligence. Okay, because so far AI has been model led. So you develop a model, you deploy the model. It could be a pre-processed output or it could be whichever way. But now is the whole reasoning models or the LLMs along with agentic AI are giving us the opportunity to reimagine the workflow itself. So imagine a simple banking transaction as a consumer. Let's say you want to interact with your bank. Today, you can open the app and you can perform any activity. You can probably call a chatbot, which is an AI chatbot. You can have a conversation. It can guide you. It can tell you. In a more sophisticated environment, it can probably connect you to the contact center. But all of that has been there for about 3 years or more. What can happen now is that if you're conversing with your bank, you want to take some action, you can build your own agent. Obviously, you have an AI agent yourself on your device or a digital twin or whichever way you want to look at it. That agent can communicate with a set of agents in the bank or protocol, which can be a set of standards, and that whole task can be completed on your behalf. Likewise, within the bank, let's say there is a process, even if it's a digital process, but it goes from one place to the other, and it goes through multiple hops, right? Even though it's digital, so it can happen in a very, very frictionless manner. But with agentic AI, you are actually dealing with a multitude of agents. So the agents are communicating with each other. So let's say you want to underwrite a loan, one agent is performing the KYC check, another agent is performing the bureau ID check, bureau check. It's fetching the information, which today also can be done through APIs, but the agents are performing that task. And one orchestrator agent or a master agent then collates all that information, brings out the whole reasoning logic along with Gen AI, and produces the output. So that I think is challenging a whole lot of operating model level transformation, and which is where I think banking or much of the industry is at right now. That yes, the technology is there to use, but your traditional models which existed 10 years ago don't exist anymore. The ones that we deployed 3 years, 5 years ago are again going to undergo a change. So how much of change management can you bring about both for the consumer as well as for your own employees, as well as for your own systems? That is the the learning curve that you need to go through.
Okay. Interesting one, sir. But one of the strongest case study of AI, according to you at SBI, which you think will take SBI or maybe the whole operation to the next level?
See, the topical theme right now is really the fraud and risk management. Okay. And there is a very high degree of uh, efficiency that can be achieved using both generative AI as well as agentic AI. And generative AI can be a superset, it can be a subset, doesn't matter. You're not getting into the academic discussion around which can do what. But I think wherever there is a lot of data to be analyzed and reasoned with. So today also you have models which can analyze the data and give you the output through an AI model. But if you need reasoning along with that, that is where the whole transformation will take place. So let's say portfolio management, fraud and risk management, life cycle management, marketing interventions, or any kind of customer communication, customer service, all of these are likely to get altered.
So when we look at the investments of AI, because technology is also expensive, how expensive that part is, how do you actually match the ROI on the investments of AI? And how much efficiency will agentic AI or whole AI will bring onto your operations? I mean, I'm sure you must have done those calculations. Just share some data points with us if we can.
If we don't have a fixed number to go after right now, I don't think anybody has, because all of these are getting prioritized. But the one thing that has happened is that the cost of tokens, the back and forth that you do with an LLM when you ask the query, so a lot of token exchange that happens, that has come down progressively. So it's very, very inexpensive now to run a query on an LLM. A lot of technology optimization has taken place, like the way we have deployed in SBI, our own Gen AI instance, is that we have created a localized version of the most frequently asked questions.
Okay.
So that you don't ping the LLM every time when you're asking the same question. You and I can be asking the same question on different days.
Yes. Yes.
But if I have to go and ping the LLM, even though the cost might have come down as a token level, still there is a cost. But if I cache that information, also like a local area memory bank, I don't have to incur that cost. So a lot of re-engineering is also taking place. So eventually, with all this orchestration, with the agentic AI also, playing a role in easing out the workflow level friction that is still there, the cost will come down. We don't have a number in mind to say that it will come down by X percentage or Y percentage.
Okay.
But it is evident that it will. Now, yes, the technology is expensive, right? But I think world over, it is now moving towards more open source. It is moving towards more inexpensive ways of consuming the technology. And hopefully enough, it will not be a prohibiting or the limiting factor if you want to deploy something like AI. Because if consumers are going to starting to use AI on their devices, which is also now quite common, but it will become mainstream over the next couple of years or maybe a little more than that. Customers using AI and banks or any other brands not providing that same experience will start creating another level of friction. Or you are very happy talking to your Siri for, let's say, 10 or the 20 things that you do in a day.
Yes.
Even today, perhaps, and maybe in future, all 20 things your Siri is handling for you.
Yes.
But if your Siri is unable to talk to an agent in the bank,
Yes.
you are still going to the banking app and performing a set of actions remotely, right? Or maybe doing old-fashioned visit to the branch.
Yes.
So that is where, these things will start to connect with each other. After I said that the protocols will emerge, the guardrails will emerge, the governance will emerge, the regulations will emerge, and then this whole ecosystem will hopefully come up to a place where it is not inexpensive to include everybody in this. Because remember, the last thing we want with the new technology is that, it's only meant for a few people. And everybody else who doesn't understand or can't afford gets excluded. You don't want.
Yeah. So let me understand one part specifically. As we understand, the LLM and the whole technology part is quite expensive, and they charge for every every punctuation. So you are saying that you are creating the template for those mundane or the regular queries questions.
We've done that already.
So that helps you to reduce the cost. Fantastic.
And the time also that it takes.
Yes.
Even though it doesn't take too much time, but nonetheless.
Okay. So going ahead, sir, can you tell me what kind of difference will you see in efficiency in terms of evaluating the loan documents, disbursing the amount, something like that? If you could give me some sense on that.
See, like I said, Amol, it is very, very clear that there will be efficiency unlocks that take place.
Yes.
If a process is inherently inefficient, there will be a larger unlocks.
Right.
If it is already working at, let's say, 90% efficiency, you could have a case for another 5%, 10% under.
Right.
But it is again very process specific. So let's say you take the example of loan underwriting. You perform, let's say, 10 activities to underwrite a loan. 5 of them move to agentic or some AI-led process. They become efficient, but they may not be the most heavy-duty process.
Yes.
So they may not at an overall level unlock too much of efficiency because the overall end-to-end already might be very efficient. Like we can underwrite a loan in a matter of seconds.
Yes.
So with AI, can you reduce the number of seconds to 1 second or a fraction of a second? It is not going to alter the customer experience very much. The customer is not going to say, why should I wait for 10 seconds? Take exactly alone 1 second. Nobody is asking for that, right? So where do you want to bring in the efficiency? You want to bring in the efficiency that your error rates come down, your reworks come down, your false positives come down.
Correct.
You manage your risk better, manage your frauds better. That is where the efficiency unlocks will happen. So very daily.
Oh, meaningful one, sir. Going ahead now, we have been talking a lot about the digital transformation, AI and everything. AI is a flavor of the season, so I wanted to get that part first. But second part of the story, which a lot of banks are still struggling with their core banking infrastructure or the legacy infrastructure that we are talking about. what kind of changes do you see happening with that infrastructure or that part of IT with the banks? Because again, the costs are huge and a lot of things are at stake.
Correct. See, core banking modernization as a theme has been in the industry for the last few years.
Yes.
So all banks and all core banking providers have progressively modernized the applications that the banks use.
Right.
Most banks over a period of time would have done extreme levels of customization also. So the core banking that SBI uses, even if it's the same provider with another bank, they will not resemble each other.
Right.
The functionality will be the same, but the screens will look different. How they perform a certain task will be different because it's customized to that bank,
Yes.
right? However, the modernization effort that's been underway for the last few years has helped changing those core applications, or what you call it, legacy applications, into microservices architecture. So microservices architecture then gives you the agility and the flexibility to plug in and create smaller instances, reduce the load on the core application. Like we've been following the core for a period of time now,
Yes.
and we've taken out a lot of these heavy duty transacting services from the main core application and brought that out on another layer. Yes, like a middleware. Now that engineering part has already been done. Okay. So I don't think it is limiting anymore to say that I have an old core banking, because the old core banking itself has got modernized. So do you have a case to rip apart your core banking and say, no, let me first build a new core banking and only I can do here? I don't think that is right.
Yes.
So applications, as they progressively, get updated and modernized, they're equally compatible, I would think, to plug in any kind of, AI workflows. Of course, AI will require another set of enterprise level architecture, but that is again going to sit alongside core banking or sit around that or sit on top of that. But it is not going to come and replace the core.
Yes.
Unless the core banking manufacturers themselves say that I'm building a new core banking application, which is not an application like what you used to have in the past.
Yeah.
It is an AI, agentic AI bunch of workflows.
Yes.
If you're going to get provided something like this, and the industry starts moving in that direction, it all means banks will actually be a part of it.
Hmm. What are the major changes that we are going to see with SBI Yono or SBI 2.0 as we call it?
No, I can talk about Yono 2.0. I can't talk about SBI 2.0 because SBI is continuously relearning itself. So I don't think it's right to say that it is going to be 2.0. SBI Yono SBI might be on 10.0 or 15.0 from that point of view. But yeah, Yono 2.0 has been in the works for quite some time. We are in the CUG testing phase right now. We are pretty happy with how it's come out, and we are hopeful that in a reasonable time in near future, we should be able to take it to the market to our customers also.
Okay.
And that has been an effort for us to not just develop a new front end, as it might seem that, okay, a new app is going to come or a new internet banking is going to come. It has been a huge transformation effort because we've had to also create complete new stacks on the engineering side, right? So it was as much a customer facing set of changes that we wanted to do or rebuild, and as much a inside view of how we wanted to re-engineer our tech stack.
Right.
So most of that has been done. Some fine tuning and testing level are getting sorted out now, and hopefully enough, this will be good for us. And most importantly, it will give us a flexibility to plug in any new tech that we want to. Okay, so tomorrow you want to plug in, let's say, a fintech which is going to provide you with X, Y, Z stores. It is not going to be very complex to do that. Even in Yono 2, we have actually made quite a few fintechs.
Yes. If I specifically ask you about fintechs, because we are at a global fintech festival and you are being the largest bank, initially fintech started with we will beat the banks. Then they came with a partnership and collaboration model. And I see that every bank has number of partnerships with the fintechs. How is this whole partnership model is shaping with SBI for fintechs? And what kind of support do you think fintechs will offer to you going ahead? Why I'm asking you this, sir, is because over the years, banks have also started developing their own teams, developing their own technologies, innovating their own products because they don't want the data to go out. Customer acquisition is an issue because they think if fintech acquires, who will own the customer is an issue. So, what is happening on that front with the partnership between fintechs and banks? If you could share some thoughts there.
See, the partnerships continue. I think it's only matured to the extent that both banks and fintechs understand each other a lot better from what they would have any time in the past. And it could have been even a year ago, or 2 years ago, or 10 years ago. The big thing that has happened is that when fintech started off, and let's go back, let's say 10 years, banks were not on microservices. Banks were not using APIs. Fintechs were on modern microservices-based architecture. They could, host something on the public cloud, one of the cloud service providers, and very quickly get themselves in the market. They were very good at designing, creating very good frictionless contents and, all of that. Banks have learned that over the last few years. So I don't think there is a tech arbitrage anywhere, right? Our tech is also got modernized. We also invested in tech. And generally, what is available today, even let's say you take the example of AI, what is available to a fintech is also available to us.
Yes.
The talent is available to them. The talent is available to us. The tech is available to them. It's available to us. Probably we have deeper pockets.
Yes.
And some of them also have very deep pockets. So fintechs also. So I think at some stage, while the collaborations of continue and people are, kind of complementing each other, there is no harm in competing either. Because every fintech also needs to develop a business for itself.
Yes.
Fintechs don't see themselves as a subordinate to the bank to say that I will serve the bank as a technology service provider. They're also building their own business. So in some places, like it's happened with payments, or it has happened with, let's say, acquiring, we compete also.
Yes.
And there is nothing right or wrong about it, right? So I think for times to come, all kinds of possibilities will coexist. We'll compete in some places, we will coexist in some places, we will collaborate in some places, we will complement in some places. All of them start with C. So you can imagine that, there is a good place for all of us to coexist also, which is again starting with the C.
So one last question, sir, specifically again on the fintech. Where do you see the future of fintechs? Because they came with a big bang. Couple of them created a good innovation, but they shifted their focus from wallets to payments to credits to now wealth to coins like crypto and stable coins and tokenization, and the rally still goes on. Uh, but on the other side, investors are going very slow now. They're keeping their dry powder very safe and investing quite judiciously. So where this India's fintech rally will go according to you?
No, I think despite whatever you said, Amal, uh, fintechs might have pivoted to different lines of businesses, might have diversified, might have completely stopped doing one thing and started doing another thing. But a lot of that is also determined by the overall ecosystem. So if UPI has come and replaced wallet, there is, a reducing market for wallet.
Yes.
So why would you want to be in that business? Now, regulations, let's say, are of a certain nature for a certain business, then fintechs have to align with that. They have to pivot. And please remember, fintechs start with one or two lines of businesses only. Unlike a bank, which has got, 10
Retail businesses.
different, multiple tens of lines of businesses. So for a bank, it is never going to be visible, even if, let's say, we slowed down on one line of business and said that, when we sit down in our analyst meetings and say that, no, we are consciously throwing on this line of business, not too many eyebrows will be raised because there are 20 other lines of businesses. But when a fintech does that, it almost seems like that, oh, they got it wrong. They didn't understand the market. They were riding on, the VC money and this and that. I don't think that is correct because fintechs are also adapting themselves to, the changes which are taking place.
Yes.
Now, if you look at the whole tech modernization in the banks that has happened, right? And if banks are saying that we are more or less, we are comparable to the tech stack of a fintech, then what do the fintechs bring out new, right? That is going to be the big thing. And, my point of view has always been very simple that think the fintechs have to think of themselves setting up and building a business of their own.
Yes.
Because this question will otherwise keep coming that who owns the customer?
Yes.
Are you a subordinate to the bank? Are you a
Exactly.
service provider to the bank? Are you a technology provider to the bank?
Yes.
Are you only solving one problem for one bank? How long will you be the setting? Can you what you can do that? Like I get a lot of fintechs asking me, what problem can we solve for you?
Yes.
Or some fintechs will come and say, I have solved this problem for that bank. I can solve the same problem for you. But that's a very narrow way of looking at, if I have a problem, I'll come to you, otherwise I won't come to you. So how do you pay up? First, if you have a problem, like then how across one company which only manufactures paracetamol, for a consumer goods company which only manufactures one type of soap. No. So you have a diversified portfolio. Absolutely. And you're not coming in saying that I'm solving your problem. Your problem is solved. I go to the next guy, solve the same problem for him. Then I'll come back to you and ask you, okay, what is your next problem? Let me solve that. That can happen. That always happen on the side. But what is the business that you're building for yourself? That finally matters. And the people who've done that at scale and are very, very eminently, dominant right now have done it that way. They are known, for what they are rather than, I work with this bank or I work with that.
For sure, that was truly meaningful and very, very relevant. I'm sure that's a good summary for a fintechs as well. apart from what we learned from AI from you specifically for readers and viewers. Thank you so much for all those thoughts.
Thank you, Amol.
And thank you so much for watching and staying connected with ETBFSI. Thank you.